every single party that lost digital assets in the recent blockchain downfall would like to find out what triggered this knock-on effect. Are there too many blockchains? Too many tokens that are confusing the users? Or perhaps responsible are online hackers whose job is to expose blockchain pyramid schemes? The statistics were right. The numbers were correct. The temperature of the environment of the market to invest has never been better. The investments were worth the hype. Professional traders, venture capitals, launchpads, institutional or retail investors gained knowledge, did due diligence, check all market statistics, and didn't forget the technical analysis. But yet again, the large majority were not able to predict what was going to happen, consequently losing a great deal of digital assets and in many cases life savings. What we are currently witnessing in the cryptocurrency market is just the beginning of forthcoming effects of generating jaw-dropping amounts of data. Wikipedia defines data as a set of values of quantitative or qualitative variables converted into binary digital form. Data, however, has a deeper meaning deliberately concealed from potential data users. Data are packets of binary bottled-up energies which are infused and stored within human consciousness. According to CIT Scientific, at the dawn of 2022, the amount of generated data in the world was estimated to be 44 zettabytes, and by 2025, there will be 175 zettabytes of data in the global data sphere. Breaking down the numbers, what it basically means is that by 2025, every single person in the world will have been infused with at least 22 terabytes of binary data, which is the equivalent of data stored within 22 iPhones 13 Pro or 1,100,000 trees made into paper and printed. Now, these numbers don't tell us much. In fact, we don't care about them. We are not concerned with what is happening to that data, where it goes, where it is stored, or whether it evaporates. And that is the problem. We have been convinced that data is not stored within us, but rather it is kept on different types of devices, such as phones, clouds, hard drives, or computers, which of course is true. However, every time we watch, read, write, play, or record something on our phones or computers, and this webinar is not an exception, the same data is simultaneously registered and stored within our consciousness. Once this data is stored, it becomes packets of binary bottled-up energies, which will be at some point activated. As a matter of fact, the primary objective of science is to create as much data as possible, whether it is in psychology, education, politics, or crypto investments area. Data is everywhere. Data is omnipresent. Once scientific data has been created, big data takes over and infuses our consciousness with it, which is done with laser accuracy. The targeted user is gradually becoming accustomed to a product, a piece of news, a point of view, or some service. Big data knows that the user couldn't afford a given product 2 years ago, but now the user has enough funds and can finalize the purchase. Whether we are aware of it or not, and whether we want to accept it or not, we are subject to data. And as a result, the demand for data increases every day. In fact, we become data. Now, how do we become data? Have you ever wondered why the second bite of your favorite Mac salad or sandwich doesn't taste as good as the first one? Why the second sip of coffee is not as enjoyable as the first one? It's because before you physically taste it, you have already utilized it. For example, while driving on the freeway, we suddenly see a McDonald's or Starbucks sign where we can get our favorite cup of coffee or a sandwich. The moment we made the observation, the internal pleasure was triggered. That pleasure are the packets of binary bottled-up energies which are immediately utilized. As a result, the second sip of coffee or taste of the sandwich doesn't taste as good as the first one. The coffee or cake had been utilized, or if you prefer, consumed, before we had a chance to physically taste them or touch them. The same process applies to every single field of our life, and crypto investment is not an exception. Imagine a blockchain investor whose desire is to achieve financial success. The investor has gathered all possible data, made due diligence and technical analysis. In other words, the investor has received some first-hand data. The investor may achieve a number of spectacular financial accomplishments. However, sooner or later, the prosperity or part of this success is going to be dispersed. But why? Because the investor utilizes the whole data, the binary bottle-up energies, before the physical success can be finally manifested. In other words, the less data is utilized, the greater and more sustainable the success. So instead of utilizing data, the investor should dematerialize data. Now, that is just the beginning of this amazing and exciting process. There are actually two types of data: smart data and anti-data. Our crypto investor who eventually lost part of digital assets didn't know which part of the gathered data was smart and which was anti-data. And what triggered the recent blockchain knock-on effect was utilize anti-data. And although there could be some undeniable facts, such as lack of balance between supply and demand, inflation, and poor cybersecurity, these, however, factors are the ultimate physical manifestation of utilize anti-data. What is anti-data, and why is it so harmful? Anti-data has been specifically designed to speed up the process of utilization. Its mission is to convince the user to activate the utilization process of data as soon as possible. Once the user's consciousness has been imbued with anti-data, it starts acting like a virus, gradually compromising the immunity of smart data. But what is even more important to underline is that anti-data creates the second law of thermodynamics, the laws of entropy and entropy. Say we make hot coffee. We put it on a table and come back for it after some time. Unsurprisingly, the drink and the coffee gets colder. We know without a shadow of doubt that the coffee is not going to get hot again. We know this process is not reversible. The same with our bills. Once we have paid our mortgages, leases, school fees and credit cards, the money is not instantaneously going to be back in our account. We know that we have to earn it first. Therefore, we shouldn't be surprised if, after a number of consecutive accomplishments, our crypto investor loses a substantial part of digital assets, say after 2, 5, 10, or even after 20 years. That is how the second law of thermodynamics works, and what the probability of calculus and statistics confirm. The rule is simple. The more anti-data infects a particular area of our life, the faster the final manifestation of the second law of thermodynamics. Every day there are more and more binary anti-data embedded into various blockchain markets. These anti-data is subsequently utilized by the users, and that is the main reason why the crypto market is unstable. By analogy, the same rule pertains to traditional currencies. The reason why other currencies haven't hit the bottom yet is that not enough anti-data has been utilized yet. It is therefore paramount to determine which part or sort of data particularly stimulates the utilization process for the user. One among many parameters is the resistance to utilizing anti-data. In other words, the greater our resistance to utilizing gathered anti-data is, the more robust smart data becomes. VAVPay objective is to buy back from the global cryptocurrency markets as much anti-data as possible and dematerialize it. And of course to educate the users to dematerialize their anti-data. VAVPay wallet is the multifunctional Web3 decentralized financial and educational application which enables the users to trade and dematerialize anti-data. The users will be able to sell their anti-data and purchase anti-data from other users. The purchased anti-data is then sold in exchange for VAV tokens and ultimately dematerialized. The dematerialization process can be compared to the traditional plastic and waste recycling method called injection molding, and we know that the less plastic, the healthier the environment. The same principle applies here. The less anti-data in blockchains, the greater the value of cryptocurrencies and projects. VAVPay wallet offers a number of NFTs. One of them is avatar called Main, a digital human whose job is to assign daily tasks to the users, of course, which aim at finding anti-data. Upon accomplishment of each activity, the users gain a chance to burn the VAV token. VAVPay wallet has an inbuilt encrypted communicator whereby the users can not only communicate with each other but also send text and exchange VAV tokens. Meantime, most blockchains struggle with the following challenges. Firstly, they are not scalable, meaning the more transactions are placed, the longer the waiting list is. So the one who pays the most money is the first. Another important aspect is registration and login by email address. This means that the user's personal data, and not only, can be managed by a third party. Regarding stablecoins that seem to be an independent currency, they are based on inflationary US dollars. As the US dollar loses its value, so do stablecoins. Last but not least, poor internet bandwidth can be also a challenge, and as a result making online transactions can be extremely slow. VAVPay wallet is chained to a scalable, secure and decentralized Nexus blockchain, which offers no transaction fees for basic transactions. Transactions are confirmed within seconds. A key feature that makes Nexus stand out from among all other blockchain platforms is its use of signature chains. This means that for access to the user's wallet, only user's username, password and PIN number are required. There is no need for the extremely long private key commonly used by other platforms. So, what business opportunities does VAVPay wallet offer to its users? The smart contract guarantees the users 10% of the company's total revenue that is shared with VAVPay wallet users twice a year. The first 1,000,001 of the users who decide to download VAVPay wallet will receive 51% of the company's shares, and this of course includes the total company's revenue. The users will have an opportunity for staking VAV tokens and receive additional incentives in the form of voting trust. Based on ranking, the user who sells anti-data and at the same time buys back anti-data from other users receive an NFT encrypted communicator as a reward with an annual free subscription. If the user repeats this process in the first year, receive a 30% discount as a reward on all VAVPay NFTs and profit participation from Tetsa Launchpad investments. So actually, the user becomes a business owner. Total allocation is 101 million VAV tokens. 20% of the total allocation goes to fundraising, which translates to 20,200,000 VAV token. Now, fundraising consists only of 3 phases. And right now, we are at the pre-seed investor phase, where VAV tokens can be purchased for the lowest price. The maximum number of VAV tokens per investor in the pre-seed investor phase is 14,000. And if we divide the pre-seed total allocation by 14,000, this would give 101 investors. In order to complete transaction in the pre-seed investor phase, please go to www.vavpay.io/preseed. And to acquire VAV token, the investor is required to provide Nexus, which can be purchased for Bitcoin on Binance or for USDT on CoinStore exchange. Now, I would like to point out that today's webinar launches a series of live webinars dedicated to VAVPay wallet technology, VAV token usability, burning processes, Tetsa Launchpad, NFTs, roadmap, Nexus blockchain, or tokenomics. And the next live webinar shall be ready within around July 28th, so that is within a couple of weeks. So to sum up today's live webinar, I would like to thank you for your time, participation and interaction. Please join us on social media, where you would be able to find all the latest news, announcements and updates. And of course, feel free to post your questions and share today's webinar, which will be available on social media too. We would truly appreciate that. Thank you, best of all, and see you soon.